Well, good morning to you all. Tony Virtue speaking, Virtue and Partners with our regular monthly update. First of all, a Happy New Year to you all. I do hope you got some rest, so much going on at the moment and can be quite unsettling. Let me start with the Australian news there. Australian CPI came in quite a lot higher than we were hoping yesterday. 3.8%, actual 3.4% trimmed. That's not a particularly good news story. RBA will look at interest rates next week and markets are forecasting a probability they will go up. Now, why is that the case? We do have tight employment, as you can see in my figures. 87% of the jobs created in Australia are now government related or working for government or products for government there. So we've got a spending problem there, and that is basically why we're out of whack with other countries in the world. They will need to jump on this pretty quickly there. In the immediate, markets have been reasonably calm. As you'd expect, the Australian dollar's gone up a little. US overnight held their rates where they are and probably won't do something for a few months there. So, look, probably the way to look at this is we're probably at the bottom of the interest rate cycle. You're seeing fixed rates begin to move up with the banks there, and maybe this will slow down the property market. Certainly it will give us cause to think about it. I do have a personal theory on this. If you go down to a bit deeper as to the subsections, you see a lot of travel, cruising as an example, and the amount of people now in the allocated pension or drawdown phase of super now at 25%. That's growing rapidly. I can tell you when I travel, there are an awful lot of people drawing down on their super and travelling and spending money. And that may in part be, so I would describe this as discretionary spending, which is a good thing, as opposed to forced spending where people are really struggling to cover food and electricity with those subsidies coming off. That's a far more serious matter there. Just turning to geopolitical as we speak, there may be a strike in Iran. This has been a long time coming. And all I'd say to you is we went through this last year in different aspects. Markets were relatively steady. If there is a sharp move either way, the trick is to be calm, not to try and trade out and trade back up again, and just be mindful of the media as to what they're saying. Probably a more important story at the moment is the practical implementation even of artificial intelligence. Meta overnight stock is up 10%, that will be Facebook, Instagram. And this real rush now to implementing AI into business, into running more efficient companies. What that should lead to is new businesses coming out of the ground. I speak in my notes about, you see how the Spotifys, how the Airbnbs, how the Netflix, how the Ubers have come from nowhere over maybe a decade to market dominance. So look for more of that happening. Your fund managers should be picking up on some of that, and if we are true believers, we may invest in that directly there. As we speak, global markets again are an all-time high. So, if anything, as we go through their earnings, the risk now is that markets are running ahead of themselves. So a drawdown of 5 to 10%, very, very common in situations like this. Trump talking about this 5.4% growth in their own economy, far, far better than Australia. And to some extent, then you just get that pressure of markets growing too fast and too quickly. And there is a sense at the moment that there is a real momentum and energy out there, which sometimes can be a little problematic. Turning to Australia, we go into interim earnings next week. Again, Australia very much a dividend play at the moment. We are seeing some rotation from the banking sector into resources, which is de facto exports up into Asia and in particular China. At this stage, those markets look solid. So at this stage, I would say let's just look at being fairly realistic. We've had several good years in the market. there should be a time of settling down with that. The overall growth of the economy, we're looking at $21 trillion of assets throughout Australia, so we do have deep pockets if markets turn down for a little while, just to reinvest back in again. As I mentioned before, $4 billion worth of super every week going into the system, and 40% of that going back into Australia. So the message is, there will be things happening this year. We'll take it in our stride as we always do. Stay long term in our thinking. This is not the time for unreasonable risk taking. Let's see how Iran plays out. You can see how gold and silver have gone through the roof. That is a natural reaction where there is some level of instability there. But markets will continue. If it's something urgent, I'll be in touch a little bit quicker. Otherwise, we're as busy as ever. We're increasing our team, very much focused on looking after existing clients and their friends and family. I think that's enough for today. Tony Virtue, when experience pays.